General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Chart work been so simple since I only do NASDAQ now. It's week 3. Bullish sentiment went down 0.7%. Cash on the side went down 2.4%. And everything went to bearish sentiment. So bearish sentiment is at 37.4%. The Fed watch is at 96.8%, no change. Main thing here, I'm looking at a CPI because, well, I kind of didn't screenshot the part, but the forecast for PPIs to stay the same, and year over year CPI is supposed to go up. So I think that's going to be like Wednesday midweek reversal. Its options expiry week this week as well. And earnings, none of this stuff is top 10, but TSM Thursday, that's going to have sentiment for NASDAQ. And then banks just in general is going to give, a taste of how the strength of the economy is. So we got JP Morgan, Citi, Wells Fargo, BlackRock. United Health Group is Thursday, Goldman Sachs, Bank of America, Morgan Stanley. This is all kicking off earnings season. I need to get the month chart too. These commercials are old. The new commercials come out Monday because last week was we had the holiday. Well, it wasn't the holiday, but it was Jimmy Carter Memorial. So I guess the government wasn't up to do the commitment of traders, but you can just see how heavy short they were and how high the VIX is. You can even see the downtick on the commercials and non-commercials. Yeah. Right here you see the commercials alone or non-commercials alone. But commercials just took everything down in total. More positions are short. For the monthly, you see we coming down. We closed past previous month's low. The month is not over yet though, but there's a monthly order block we can come to. We had that inefficiency right there. The weekly perspective, my target is 2701.25. And the daily perspective, nothing really stands out as far as targets, but this is still my target from just it's actually the low of this weekly down candle. That's what I'm targeting. So right here, you can just see it. It's already been swept one time. Right up under there, we got the monthly order block, and we got my fair value for buying area, which is just under this dealing range low. From the H4 perspective, only thing that really stuck out was this H4 fair value gap. Note that we're up under 2025 open price as well. The H1, I'm gonna let it play out. Not really looking for anything in particular. I think we're gonna open up and go lower and take it day by day. I want to target this, so I prefer a pop up before it drop down. That'll be an ideal delivery for me. But that's that on that. Y'all have a good trading week. Peace.